Never again in a lifetime. 12, 12, 12. Hello traders everywhere. Adam Hewison here, president and founder of iknow.com and co-founder of MarketClub. Welcome to today's update for Wednesday, the 12th of December. So never again are we going to see 12, 12, 12. And actually 12 times 12 is a Fibonacci number. So the question is it going to be an impending doom, or is it going to be an amazing thing for greater things to come? We'll have to see. So the question is the Fiscal Cliff. Everyone's going to answer it. My prediction is nothing happens in 2012, and maybe we'll get something in the first quarter of 2013. We'll just have to see. So lots going on. Is it time to buy Apple? We'll be looking at Apple today, and that is not looking so great. It's been a big disappointment for many, many traders. So let's go right to the charts and our portfolio. And I'm going to go right to the theme here. Big Christmas coming up, the iPad mini. But look at this market. It's really not acting so well. I mean, that's the bottom line. Look at how this market has sort of come back down. This key level here is going to be the 500 psychologically level. And of course, we're going to see resistance really for a while. Here's the 200-day moving average, and we're way below that. So there's nothing good about that. There's the 200-day moving average. You can see we've been down that for, gosh, since the beginning of November. That's not a good sign. Also, the PSAR right here, the parabolic stop and reverse, negative. And we were oversold right here, and you can see we've sort of come out of that a little bit. But let's take a look at our MACD and see how that's playing out. Moving down, MACD is still down, not quite so oversold as it once was, but certainly it's below. It's in a sell mode, and it looks like it wants to go lower. So the other question is, with our trade triangles, you can see quite clearly we have them in a negative mode. So again, we're looking for this market to continue in a sideways to lower level. Sideways is minus 65 is a trading range, so I wouldn't expect anything out of Apple unless there's some big news about the Apple TV that comes out in Q1 of 2013. I think Apple had a great go of it, but now you've got a lot of tablets on there. You've got Kindle, you've got the Nuke from Barnes & Noble, and of course all the other tablet makers are in the fray with the Android operating system. I happen to like the Apple operating system, and I happen to like the iPad, which I use constantly. So that's my little plug, but the stock looks negative. Also, you have this cross, which is not good. This is called the death cross, when you have the 50-day moving average cross below the 200-day moving average, and you can see that happened just right here. So it just happened right at this point right here. You see that crossing right there between the two lines, and it was not a good sign. So let's see how that plays out. Let's go to our next market, go back to our portfolio, and let's look at the S&P 500. And there's the S&P 500. And let's go right to that chart right now. Oh, that's going to be a silver. Let's go to the S&P. So here's the Dow Jones. We'll start with Dow. And look, you can see the Dow is doing very, very well. However, it's in a sideways mode. We've got a plus 70, but our monthly trade triangle is still negative. And I think that's the important one to think. So I wouldn't get too enamored about this market on the long side. I think we want to look at this market perhaps in the new year. We're going to be making a pretty major announcement on Friday. So please stay tuned to the blog on Friday to see what's going on. So let's just go back to our blog. Let's look at the NASDAQ. And there's the NASDAQ again. The NASDAQ is being weighed down by the Apple. And you can see there again, the 200-day and the moving average, the 50 is very close to crossing, which would not be a good sign for this particular index. And again, you made the cross, so it's just losing a bit of momentum. But nonetheless, it's made a pretty good recovery when you consider the 2,800 level, and now we're trading over 3,000. So moving right along, let's take a look at the S&P. So I'm going to go right here. I just moved it by chance, and here's the S&P really acting pretty well for the day. You've had a great recovery from 1340 all the way up to almost 100 points, which is pretty significant. So it looks like we can see a Santa Claus rally here, but we still have another 2 weeks left to trade. Serious. And we'll be doing an announcement on Friday, so be sure to check out for that announcement. But here you are seeing the moving averages. Now let me put a get my telestrator on here and I'll show you. You'll see in the two moving averages, this is the 50 right here. It's beginning to turn down, and this is the 200, which is flattening out. So you want to watch that, what they call a death cross. If the market goes below there, then it really spells a lot of doom for this market. But they're getting closer, haven't crossed yet. Let's pay close attention to that in the weeks ahead. So let's clear that screen off. And let's go back to our portfolio. And let's take a look at crude oil. Crude oil has actually had a nice pop today. And let's take a look at the 3-month chart. A couple of things to look at here. One is you have sort of, since really the beginning of October 25th maybe, you've sort of gone nowhere. You're sort of trapped in this trading range, and it's really pretty clear what it's bounded by. If you look at the trading range, you've got a top on it right around the 89 to 90 level, and on the downside you've got a bottom right here, which we sort of touched on yesterday on Tuesday. So again, you sort of at the lower end of the range. We were oversold. You can see it right here. We popped out of that, and it looks like we want to see this market improve from current levels. I think anything that happens in the Middle East, and that could potentially happen anytime, any day, could pop this market up. So it's got a base. If we see this market, here's the big thing I would really looking for pulling the trigger. If we see this market go over 90, for example, anything over 90 is going to be very bullish. You're going to break through the moving averages, of course. You're going to break through the 50 and the 200-day moving average. Plus, you're going to start seeing a lot of our trade triangles. That's the one to watch. The weekly, if it pops over there, then it's a buy. And we'll see this market go, I think, significantly higher. So let's see how that plays out. But again, on the downside, the trend is clearly mixed right now. You should be out of the market waiting for the next major direction. So let's clear that screen off, and let's go to our next market. And the next market we're looking at is the euro dollar. Now, this is a big surprise for a lot of people. We had the pullback from the highs, and everybody thought, okay, the dollar's going to get strong again, blah, blah, blah. But what happened was, this is like the currency that will not die. And if you look at the Fibonacci retracement level, we have all our green triangles are positive, meaning a strong upward trend. But if you pull this back down from the highs down to here, you can see it was a perfect 50% pullback. So this is an area the market should have found support. It did find support. It's back now challenging the highs. You've just had a PSAR buy signal today in this market, and all our trade triangles are green. So it looks to me like we're going to see this market test the 31.30 level again sometime in the not too distant future. So let's just go to our next market. And the next market is going to be copper. Copper's performed very, very well. If you look at our original buy point here on the weekly at 355.20, the market's never varied from that. Plus 90 is a strong upward trend. And look at how this market sort of just moved right back up and is performing very, very, very well. Let's just put a Fibonacci in there for fun, going from the recent highs. I think that's the recent highs we've seen. And let's just put that, there we are. So let's just pull that down. So we're in that zone, a little bit over the zone in terms of the 61.8% retracement. So this is where if it's going to have problems in copper, it's going to have it at this level. But nonetheless, the trend is very clearly on the upside, and we expect this market to perform in a much better way. Now, gold has been very interesting today. We did have a pop just a little while ago. We pulled back. Market's still higher for the day, higher for the week. But the reality is we're sort of trying to build this base to go higher. So let's watch that very, very carefully. Mixed signals, plus 55 is a trading range. So let's go to our next market. That's the S&P 500 cash. Let's close it up because I want to show you the silver. And that's the last market we'll look at today. Silver, big performance today on the upside. It's plus 100. Definitely on a trading to check this out. Let's scope this out to 6 months. You can see where we are. So the first level is going to be the 34.30 level, then up to 35. That's what I think is going to be the key level. But again, if we see another pop tomorrow, meaning Thursday, and good close on Friday, I think this market is going to be off and running to test these highs. So, hey, we've covered a lot of markets. We'll be back tomorrow. Probably do our show tomorrow, so stay tuned for that. But be sure to check in on Friday where we have really an update that you won't want to miss. But I'm Adam Hewison for Market Club. Thanks for stopping by. Every success trading. We'll see you tomorrow.